how do you mix your investments is very important, because each of them will have its own expectation of return, its own risk associated, and how you combine them is very important to get that good return after all.
I'd like to ask, how important is asset allocation for the purposes of achieving a good return?
It is very important. That's a short answer. And longer is, if you ask any finance professional, they will tell you that asset allocation is very important. And probably there is not a lot of explanation why. And a second thing is, there is a bit of maybe disconnect between what people do to, when they come to track their portfolios, like they do in Sharesight. They look overall at how much money they made or how much they lost, dividends, capital gain tax, or any other tax. They look at the portfolio overall. But when they build the portfolio, probably they look more at individual investment level. And it's very important not just to figure out what are the good investments to put your money in, but how much money to put in each investment, how to allocate the money between your investments. So the result of this portfolio, when you go and track it, will be the best it can be. So everyone wants to, of course, to get more return, lower risk. And there is, of course, knowledge that taking higher risk may give you higher returns or not. But how do you mix your investments is very important, because each of them will have its own expectation of return, its own risk associated, and